Welcome back, folks. We got to love it. We have Fed Day. We have our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. You can come over to our website at TFNN. You're going to see the EverBank banner on the right-hand side. And as you pull that banner up, folks, I'm sure you've heard Chris many times. We're always lucky enough to get him on Fed Day. What you're going to see is you're going to see 6 commodities, 1 CD with no risk about it. And what this is all about, this is a commodity-based CD. We're talking about 6 commodities inside of 1 CD, and the commodities that we're talking about are gold, silver, copper, nickel, soybeans, and sugar. Bottom line, we're going to talk with Chris about it. The funding deadline for this, folks, is October 13th. This is a 100% protection of your principal, which is pretty amazing. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's always a pleasure to be with you.
I'll tell you, when last week when we were asking your staff if you could be on, I was saying, oh my God, Fed Day is here again, and here comes the crying wolf that we're going to go up on rates. But guess what? We're not.
I titled my piece that came out right after Deja Vu all over again. I mean, we've been here, we've done this, and I think the most interesting thing about the entire day it has been with both the Bank of Japan and with our own Fed.
Yes.
Basically, they have admitted that they really don't know what's going on. Nothing's fitting their models, and I think both have just kind of thrown up their hands and said, I think it's best to do nothing. And we're just going to kind of stay on the same path we've been on and hope that it starts working.
And, of course, in Japan's case, it hasn't worked for 20 years, right? What's amazing is that we all say, and we've been in the market for a long period of time, but you hear many times, well, this hasn't happened before. But truly, this hasn't happened before. We haven't been at low rates for 7 or 8 years and negative rates across the world, right?
Right. And nobody knows. There's no exit plan. There's no... history to look at and say, oh, well, this is how this is going to end. Nobody knows how it's going to end. And again, I think ultimately it speaks to the precious metals and a little bit of commodity exposure and being diversified. I think that's going to be the key for investors, is to have that asset class diversification, because you really don't know where this is going to end. And I'm not one that is a doomsday guy that thinks everything's going to fall apart, but I'm sure glad I have a little bit of exposure to both precious metals and commodities in my portfolio.
And what we're talking about, folks, the common sense approach, would be, if you come over to our website at TFNN, what you're going to see is that you're going to see it's a 5-year market-safe focused commodity CD. And the bottom line is that when you can't lose your principal, but you can make money in the aspect of where commodities may go, can go, all of the above, in this type of an environment, it's pretty cool. So can you tell us a little bit about how this works?
Sure. It's based off of the commodities that you mentioned at the top of the show.
Yes.
Gold, silver, copper, nickel, soybeans, and sugar. So you've got 2 precious metals, you've got 2 industrial metals, and you've got 2 what we call softs.
Yes.
And what we're going to do is we're going to measure the price of those commodities, those 6 commodities at the beginning of the CD, the initial pricing date, and then we're going to measure them each year during the 5-year period. We're going to calculate the average return of those 6 commodities over that 5-year period. It's going to have a cap of 50%, and then we're going to pay CD holders their principal plus the upside of those commodities up to the cap of 50% over the 5 years.
Right. And what's so cool here, folks, is this. So picture that the commodity market is very volatile, folks, but this is a way that you can get in the commodity market, that you actually get a pricing structure once a year, because these will be priced out once a year. Correct, Chris?
Correct. So it's not exactly a point-to-point. So, as you point out, they're volatile, and sometimes, if you miss out on that upside and it comes back down, you've missed out. You've given back all your returns.
Sure.
But Here, because it's over 5 years, because it's a longer time period, and because it's that averaging, you're going to smooth out some of that volatility.
It's an FDIC insured product. It's IRA eligible. What happens, folks, is it's a minimum of $1,500 to open the account. Bottom line, though, you can open whether you picture like 100,000, 50,000, whatever you feel is great for you. And if you are getting, let's say you're getting a regular 5-year CD, your only downside, folks, would be what you could be guaranteed on a 5-year CD versus what market you may get on a type of CD like this, which is pretty amazing.
Right. We call that opportunity cost.
Thank
and with
you.
the low rates where we are now, your opportunity cost is near historic lows as far as what you're giving up in order to get the potential return of this CD. And,
Sure.
and again, a key that you pointed out, it's IRA eligible. What a great way to add what is traditionally a pretty volatile asset class to an IRA with principal protection. And again, guaranteed return of that principal. So I think that's it's a perfect investment opportunity for that type of scenario.
And you know what's amazing is that, and Chris, folks, I was talking about this yesterday. They keep claiming that inflation's not out there, but guess what? If you go buy food and you're on the outside of the aisles, not the inside, if you're buying health insurance, if you're buying education, I mean, right. We're talking about big money inflation and not small money. So it's like, okay, my take is that, listen, we're in it. I'm not quite sure what those figures are in the government that they can keep saying that we're at 1.2 or 1.3%, but it's like, I don't know, it seems to me that prices are going up.
Right, and you look where we're starting from, too, on the commodities. We've been in a 5-year bear market for commodities, and last year was just really got, the commodities got pretty hammered last year. And so you're starting from a point, the first half of the year looked pretty good on commodities. In fact, the precious metals were the best performing asset class. But, we've got commodidies that are starting off from a lower base. So there's good opportunity there. Prices are down right now because of some big supplies on the ag side, on the soft side. But at the same time, we think you're going to see increased demand on those as the food changes and as the eating habits of especially the new middle class in China and India change.
All those people, no doubt. So, folks, you can give them a call. Their phone number is 855-750-4051. You can come over to our website at TFNN. You're going to see the banner. To go over it, it's $1,500. That's the minimum to open the account. 100% protection of your deposited principal. FDIC insured, IRA eligible. All of the above. You can earn up to 50% upside potential at maturity for each of those commodities. Chris, you have a great one, a safe one, and before we know it, it's going to be Fed Day again, man.
I know, yeah. We'll wait and see if they pull through with their promised rate increase next time.
No doubt. Have a great one, Chris. Have a safe one. Look forward to speaking to you again.
Thanks, Tom.
Thank you. You stay right there, folks. This is Tom O'Brien. This is TFNN. We're going to be coming right back.